Markets are absolutely crazy right now. You all saw what happened in crypto over the weekend. It just continues to crash. And on top of that, we got the stock market that's still very, very shaky. So in this video, just like we do every week, we're going to go over the markets to analyze whether corrections and crashes are coming, or in some cases, continuing. And why do we do it? Well, because we're always focused on risk control. We know how important that is to long-term success in the stock market or really any market. And if you're watching this video, you understand that. And you also know that we're here to help you with that. You know, all our Fallible people aren't actually worried about how crazy the market is because we're protected. We do these videos every week. We've got all these systems in place. We've got our entire team over at Macro Ops. It's a full research team. We've hired even more people recently. And as I always say, this is our global macro research and consulting firm. We have people studying this stuff and analyzing it nonstop every day. So rest assured, you're in good hands. We're here to help you with this stuff. That's again why we keep making these videos. So I'm saying all this just to say that we got you, because I know how crazy things are getting, and I'm actually going to talk a little bit more about that, and it's very, very important that you stay until that part, because something is going on. If you feel like something is off, you're right, because there has been a big change. I was just talking to Alex about it this morning, but we will go over that in this video too, and also how to deal with it, because it is making life and markets stressful for a lot of us, even the pros like Alex and a lot of our people at Macro Ops. So you're not alone, but we'll figure it out. Don't worry, we'll talk about it in a second. So again, always our research coming from Macro Ops. We're going to get started with the equity markets, and as usual, we're looking at Bank of America's fund manager survey, this FMS right here, to kind of get an idea of what other fund managers are thinking. Because the market, you're not playing it in a vacuum, right? There's no actual inherent value to anything. Value is determined by all the other players in the market. So if we really break it down to basics, you know the stock that you bought, its price can't increase unless someone else is buying it, right? So you're playing this game with everybody else, so it pays to know what the other players are thinking. And that's the concept we talk about of playing the player, which is why we would look at something like Bank of America's fund manager survey. So fund managers around the world are unambiguously bullish. A record majority expect above trend growth in inflation, and they collectively have their lowest allocations to tech on record. So again, this survey is to understand what other fund managers are doing and also to understand sentiment in the market. Because what do we know? If people are super bullish, that's actually a bearish sign, because it goes back to that old saying, something that everyone knows isn't actually worth anything. And that's what's kind of happening in this market with everyone becoming so bullish. So we're not quite there yet, but we're getting close. So if you're wondering if everyone's so bullish, why is the market looking so shaky like this? It's because it's like opposites. Again, everyone being bullish is actually a bad sign. If everyone's bullish and already invested, how much money is left on the sidelines to actually come into the market and push prices higher? Versus everyone being bearish, you might actually like to see that, because it means there's a lot of people left to push prices higher when they come and buy in, when they're finally convinced that, hey, maybe we shouldn't be so bearish. With too much bullishness though, it's the opposite. They can only sell at this point. And what does selling do? It brings prices lower. And another thing we mentioned here is that these fund managers have their lowest allocations to tech on record. And tech stocks right now are very much hated. Why? It's because we're opening back up. So all the work from home technology and, you know, more than just the work from home stocks, they're getting thrown lower. Is it overdone? Yes, I do think it is. As if we don't need technology anymore because we could go to the bar. No, that's not true. So Gavin Baker, who's a portfolio manager and really a great Twitter follow, I'm telling you, on FinTwit, it is tough to find people that are smart but humble also. Gavin is one of those guys. He's a solid guy. So he made a compelling case the other week for buying secular growth stocks, which happen to be a lot of tech stocks that are really hated right now. And with his argument that goes against what everyone is thinking right now, it's just interesting because if you track it, there's a very good chance that people eventually go to his side, but he's early. And again, if everyone's thinking one thing, if everyone hates tech, the most likely outcome is going to be the opposite, because that's what the market loves to do. Because if everyone knows something that's not worth much, if everyone's too bullish, then it becomes bearish in the stock market. That's kind of just how it works. So even though tech is hated, it's worth keeping an eye on tech. Like Alex says here, it's always important to have a few names researched and ready to go should the picture change. And Alex, who I've mentioned a few times, is the head researcher at Macro Ops, my co-founder over there. So companies like Apple, Amazon, Netflix, all the techs, they do look like they're in large stage 3 distribution phases, but we're going to keep an eye on it because it could turn around. This right here is a chart from NDR that analyzes liquidity. And what do we know about liquidity? It's the actual key factor that moves markets. Basically, how much money is sloshing around in the economy. Because if there's a lot of money, a lot of that money just inflates asset prices, including stocks. So if our game masters, the Federal Reserve, decide to keep things easy, that's always pretty good for the stock market. Because there's too much money, it pushes stock prices up, we make money. It's how the rich get richer and the poor stay poor and get even more poor. All because of the Federal Reserve. Kind of. Yeah, actually, a lot of it is because of them. But anyway, that liquidity measure has recently turned negative for the first time since September 2018. And historically, historically, the S&P sees an average of a negative 5.62% annual return following such readings. So what are we saying here? Liquidity is falling, and that's not good for stocks. So it's definitely something to keep an eye on. And you can see the indexes are shaky. Of course, the S&P looks better than the NASDAQ, but if we look at the NASDAQ, we cut through that 50-day moving average here pretty quickly. Now, as of today, it looks like it's recovering, but we still aren't out of the water yet. You guys remember our base case here. We were talking about a buy climax playing out in the market, and as of the last few weeks, we said we were at the end of that buy climax. And that scenario kind of played out, but it also got dampened because of all the craziness that happened in crypto. All the money started shifting from these stocks over to crypto in the middle of the buy climax. So instead of having that true climax moment, we kind of just fizzled out. But the idea was that after that buy climax, we would likely see a correction and then a lot of sideways movement for at least the summer. So even though we didn't get the crazy blow off top, we still think that we're going to be getting this sideways to lower movement. And that might be happening right now. And of course, it's tough to tell if you're trying to analyze each day by day swing. But when you zoom out, you do start seeing that sideways action. And again, the NASDAQ, it's much easier to see. This has just been a mess. And this is also because people hate tech, at least at this moment. But it would not be surprising to see this run back up to the top and then turn around again. But again, we're just playing probabilities here. That's one scenario. It could run to the top and then burst higher again. And then that buy climax theory is back on, and the fact that, hey, this wasn't the end of the climax, we're still going into it. And now that I think about it, that might be more likely because of what just happened in crypto, which we'll talk about in a second here. Now, from a macro perspective, our base macro case calls for a top in economic growth, and specifically their rate of growth. So growth isn't actually petering out, but the increase in that rate of growth should stabilize within the next 2 to 3 months, followed by a deceleration while maintaining still a high level of growth. So remember, when we're analyzing things, it's not always about the actual number by itself. Like if we're growing at 2%, sometimes it's how much is that growth rate changing too. But anyway, the New York Fed's nowcast shows that growth is already slowing some, but this is also largely due to pervasive supply and labor bottlenecks. So manufacturers can't get the inputs they need to finish goods, and employers can't hire enough people, likely because many people are choosing to stay at home and collect their boosted UI benefits. So we know that right now unemployment benefits are awesome. And what's kind of sad is that the Republican notion of if you give people too much money, they're not going to work, that's kind of playing out right now. Where I live, and honestly mostly everywhere, things are pretty much going back to normal. Like I'm going out to restaurants, bars, whatever, like normal. But what's happening is that a lot of these bars and restaurants are short staffed and they can't handle the rush of the reopening. So there's now hiring signs everywhere you look, and no one can get enough people to work. So what other conclusion are you supposed to draw other than, hey, maybe we have too much in unemployment benefits? I don't know though. I would love to know what you guys think down below in the comments, because it does seem like people aren't working. Moving on, a setup outside of the US that looks really good is India's Nifty 50. Right now you can see that it's breaking out of a 4-month compression zone. So if you have access to an ETF or stocks over there, that's a good look. And because we know inflation is coming, we know commodities are about to enter a really strong cycle. And the ones we're looking at are crude, gold, palladium, and platinum. Those are definitely areas you should look into too if you trade these types of things. So oil, for example, is trading in a 3-month sideways compression range, and it's ready to burst higher. One stock we're looking at is ticker symbol Vista, and it's the Vista Oil and Gas ADR. It's Mexican based, and basically you're getting exposure to oil in Latin America. So they operate primarily in Mexico and Argentina, and they're selling for cheap at 2.5 times next year's earnings, and they're currently breaking out of an 18-month compression zone. So with this, you're getting exposure to something outside of the United States and oil, which is ready to take off. Precious metals are another focus area for us in macro ops. It's actually the largest position in our book, and we're going to continue to keep adding on pullbacks. One great way to play it is off of small cap miners. GLDG is one of those. Definitely worth adding to your watch list because it's also ready to take off. Now, of course, we also need to talk about crypto because it has been getting hammered. This weekend was no different. And something really interesting is happening here, and not just in the crypto space or with stocks, but overall, we're getting more and more evidence of a big change in markets. And you'll see with this example. So Centex provides a high value signal regarding sentiment analysis in the crypto market. So if you're long a bunch of cryptos right now, you should listen to what they're saying here. They said that despite the sharp price losses in cryptocurrencies, there is still no sign of an end to the downward movement. Even if tactical counter movements are very likely after such significant price losses, the Centex data does not yet indicate an end to the correction phase. So as of today, what, Bitcoin is up 8%? These are just small movements. We could easily see it drop lower and lower. And what, it's down almost 50% from highs right now? Nuts. But here's the actual crazy part. The Centex asset class sentiment signals a clear turning away of investors from the asset class, so from cryptos. The news situation and the price development have contributed to a considerable loss of confidence. So what they're saying here is that people are already turning away from from crypto. And this is happening so quickly because I've been saying over the last few weeks that people turned away from stocks and went completely into crypto. Now, after a few bad weeks in crypto, they're done with crypto too. And this is what I was talking about where markets are changing, because these trends are happening 10 times faster than they've ever happened before. And the reason why is social media. And we've talked about this before, but this is just another example. It is insane to me that people are already done with crypto. And when I say done, I don't mean they're actually completely done, but the hype is already moving somewhere else now. And if you're exhausted by the fact that these trends keep moving so fast, you are not alone. Because here's the thing, in the last 10 years, we learned how damaging social media can be to our mental health, right? Constantly checking notifications, trying to get likes. Even when you're not an influencer, you're trying to get likes from like family and friends. It's stupid. But now we're moving into a stage where this same social media is being applied to the market. So you have social media, but now you're pouring money on top of it, like direct money. And you're basically combining one volatile, crazy thing, which is social media with all the algorithms, with another super volatile thing, which is the stock market. And the stock market is almost like the original social media. People used to go crazy checking their accounts every day, which they still do today. But back in the 90s, it was different because you didn't have social media. If you're looking for a notification, you just see if you made $5 or not in your account. So now you're combining those two things together. And the way they're reacting is speeding up all these trends. So one day people are looking at crypto, the next they're looking at stocks, then they're looking at NFTs, and there's always something new. And on top of that, you still have the negative effects of the FOMO from the social media. Oh, you see some guy making money in this asset class, you got to go over there. Plus the thing that's always been there with the stock market where you could see your account fluctuate every day. And I honestly could not think of a worse thing to happen to people's mental health than combining these two things. So like I said, if you're feeling exhausted with how these markets are working, you are not alone. Alex, our lead researcher at MacroOps, co-founder. Alex, our lead researcher at MacroOps, my co-founder, he is a top echelon trader. And he said for the first time in his life, these last 6 months in the market have been so crazy and so stupid that he's actually a little tired of markets. And this is a guy who eats, sleeps, and breathes markets, right? For him to say that he's tired, that's crazy. So if he's feeling like that, I'm feeling like that, I can guarantee almost everyone is feeling like that. It's too much to keep up with, even when it is your full-time job. Like I told you, we have a whole research team doing this every day. And for our strategy at MacroOps, we're more broader trend focused. So a lot of this stuff we watch passively, but we know exactly what's going on. And it is exhausting. The only people that thrive in an environment like this is someone like Tyler, who's our third co-founder at MacroOps. It was the three of us who started it. And Tyler technically actually isn't a part of our company anymore. And why is that? Well, because around last year, this is when the craziness started with these markets, right? Trend to trend to trend to trend. And this is an environment that Tyler actually thrives in. So he's like, guys, I gotta go trade these markets full time. And we're like, yes, absolutely, go do that. So he literally packed up, moved out of Austin and went to Puerto Rico where there's no taxes when you're a trader. And he lives on a beach with all the full-time professional traders. And nowadays he's getting so deep into DeFi, decentralized finance. And he's basically arbing the differences between old finance and new finance. And there's just new stuff that he's finding every day and it's crazy, but he loves it. But do you know how many people I know that are like Tyler and that type of trader and that type of personality? No one. I only know Tyler. He's a very unique individual and he's built for this. Now, of course, Tyler does know more people like himself, but there are just very few. And it is not a bad thing if you're not like Tyler. He, again, is one of those upper echelon traders. But even among the top traders, say comparing Alex and Tyler right here, it makes a lot of sense that Alex is tired. But Tyler, because of his specific personality and the specific way he trades, because remember, there's a million profitable ways to trade the stock market, and not just the stock market, but every market. But it makes sense that Tyler would be energized by it. But also, I would not be surprised if he's a little tired too because of how fast things are changing. Now, I'm talking about all professionals here, right? So if you take it to your average guy that's not a professional, has a job and does this on the side, or even hobbyists, or just anyone interested, of course, you're going to be extremely exhausted. So I'm saying all of this just to tell you that if you feel like things are crazy and it's really tiring, you're not alone. You are correct. Markets have gone through a major change. Like I said, the fact that people moved to crypto and now are done with crypto, which feels like it's only been a month or something, that's nuts. So what's the solution here? Well, the solution here is to find just one strategy and to just keep executing that strategy regardless of how fast things are changing. Because with a good strategy, it doesn't matter what's happening because it's robust enough to survive anything. And you can look at this quote right here from Jesse Livermore. And it's funny because I always have a quote for you guys that Alex posts at the top of these that basically describe what we're thinking. And what we're thinking about right now is how crazy the market is. And check out what Jesse Livermore has to say about it, the greatest trader of all time. He said, remember this, when you're doing nothing, those speculators who feel they must trade day in and day out are laying the foundation for your next venture. You will reap the benefits from their mistakes. Speculation is far too exciting leaving. Most people who speculate hound the brokerage offices or receive frequent telephone calls. And after the business day, they talk markets with their friends at all gatherings. The ticker or translux is always on their minds. They're also so engrossed with the minor ups and downs that they miss the big movements. Almost invariably, the vast majority have commitments on the wrong side when the broad trend swings underway. The speculator who insists on trying to profit from daily minor movements will never be in a position to take advantage of the next important change market-wise when it occurs. So basically what Jesse is saying here is focus on the bigger picture, the bigger trend. And in our case, and in my case, that means sticking to my strategy and not worrying about the people who are trying to jump from thing to thing. Because most of them, especially if you're not Tyler, they're just losing a bunch of money and burning themselves out mentally. So when we talk about our fallible system, you guys know it's very specific, focused on momentum, and it's very hands-off. You don't even have to look at the market because it's all automated. You get an alert and then you make a trade. And I just appreciate it so much more during times like this because I can pretty much unplug. Apart from doing these videos with you guys, I can go do whatever else I want, no matter how fast the markets are moving, because my stuff is on lock, because I have my strategy, I have my system, I know how it works, I know it's going to continue to work, so I don't have to suffer the mental exhaustion that is now coming with markets plus social media. This is becoming way more important than I thought it would, and I'm going to talk about it a lot more. And honestly, market psychology and how you deal with the market is my favorite aspect of it. How you control your own mind to deal with what's going on. All the people that use our fallible system, they go through this psychology masterclass that I created so that they're ready to use the system and fight off all the crazy things that the market makes you think. And that masterclass that I made is so much more important nowadays. I did not think it would be this bad. I knew social media markets would go together, but I really didn't think it would speed things up like this and make it so difficult psychologically. But anyway, as always, if you want to join us and use the same strategy that we use, we got this free training which will teach you exactly how to do it. I'll put a link to this training in this video and down below in the description and comments. Things are moving too fast nowadays and you really need something. You need that strategy and system. So click this link so you could go take that training right now. This has saved myself and all our Fallible members a lot of pain and a lot of money. It is absolutely worth it. Click this link and I will see you in that training.